Joining me for a look at the equity scene is Craig Pheiffer from Sasfin Wealth. Thank you so much for your time, Craig. I mean, I guess it wouldn't really be a surprise to know that the big driver of those U.S. markets and the being in the green today is the U.S. GDP figure that we got today for the third quarter, surprising to the upside. That economy is really firing on this. Just talk to us about that and also what is filtering through to the markets and what is not filtering through to the JSE.
Yes, I think the GDP number again was positive. It has been a robust US economy. The labor market's held up quite well, and that's always been the Federal Reserve's reticence to really come out with any kind of dovish statements or talk of any pivots. And they've continued to talk a tough story or take a tough stance on inflation. Not near there yet. We'll get the PCE deflator out tomorrow, which would be a key indicator for the week. Maybe give us a little bit more on this inflation interest rate narrative. But yeah, the GDP number still subject to another 2 revisions before we get to the final number.
Yeah.
So the market taking that as a positive. But probably the biggest impetus for the move today was more about the softer talk. Slightly more dovish talk from Fed officials yesterday.
Yeah.
I think that's really the major driving force. That's kind of got the US off to a positive start. We still got a long way to go before the end of the day there. But I think locally also just maybe running out of a bit of enthusiasm. The market's up 8% even after today's decline for the month. It's been a fantastic month. You can use all the superlatives and adjectives you like. It's been a good story after quite a bleak 3 months before that.
Yeah.
So we'll take the gains. That puts us in the green, still about 3% for the year. Still very, very modest. We need to do some more. But I think maybe just a little bit of just losing a bit of momentum here towards month end.
All right. Well, let's talk about some of the company news that came out. We did get interim results coming out of Naspers and a process. And over there, they did post growth in their financial metrics from the top to the bottom line. Also, the performance of the other businesses that are outside Tencent, they also are coming in with an improvement. So much so that their profitability is forecast to actually come in sooner than what the companies had expected. I did take a look at the share price and it was kind of muted, and I'm wondering what investors thought about these numbers.
I think the investors were quite positive on the numbers. They would have been well received. The market, the fate of Naspers and Prosus, not the fate really. It is all about Tencent. Let's just put it out there. It's still all about Tencent that drives the share price. But it's been Tencent, but then it's always been what do we take away from Tencent's performance because of the losses of the e-commerce businesses. So now the previous guidance was that those e-commerce businesses would reach break even during 2025. And in today's announcement, they said, look, things are going well. We've got getting rid of loss-making businesses. We're improving efficiencies. And that we could see that break even by the end of 2024. So that, I think, was the big takeaway from the whole set of results. Whatever the rest of the numbers were, that e-commerce business is heading in the right direction, and we'll see profits sooner than expected.
Yeah.
It's still, though, the case that they still take away from the results with Tencent. So it's still whatever happens to Tencent is going to drive the share prices for now and still for a very long time to come. So Tencent was down today, and I think that's really why we saw the shares, Naspers and Prosus, down, even when reading into the numbers, they were pretty positive in the outlook. Ahead of guidance.
Well, let's talk about Grindrod shipping because that share price not going in the right direction. But also, I'm not sure at this point because they came out with their third quarter and 9-month numbers. But also, if I do remember correctly, they're getting out of the JSE, right? But when will that be as well? So what did the markets react to here?
Yeah, I think it was just the fact that on a 3-month basis, they're still making a loss. They lost about $6.5 million on the quarter. on an adjusted basis. And for the 9 months, slightly lower loss, just over 5 million. So still a loss-making business in a tough economic environment. As you said, they are leaving the JSE. It is a small cap. I think it lost, I don't know what the final number at the end of the day was, over 10%, I think, on the
over
day
10%.
on the back of these numbers. And I just, trying to read the numbers is also, they're not laid out very nicely for investors.
I know, Craig. Actually, that's something that I noticed as well. And I'm glad actually an expert also mentioned that. I thought I was just the one that was that was confused. But anyway, let's get to...
me both.
I'm glad I'm not the only one. Let's get to your stock pick for today, Craig. What will it be?
My stock pick is S&P Global. It's a company that we often hear about in the ratings space as a ratings agency. They run the market indices, the S&P indices. That's a big part of their business. They provide market data as well. They've got a commodity insights business and other industry insights operations. And I think it's one of those businesses that we like because it fits the quality. It's got quality attributes and growth attributes. And I think, it's one stock that you can buy and hold and just watch it grow its earnings, show you great returns on capital and continue compounding into the future. And those are the kinds of stocks that we really like.
All right. Well, thank you so much for your time and for your insights on what has been driving investors' money today, Craig. Appreciate it. And that was Craig Pheiffer from Sasfin Wealth.